What's up, everyone? It's Caddy with Money Investing. In this video, we are going to be talking about one brand new stock. I've actually done videos on this company in the past, but they just reported earnings pre-market today. Everything I'm going to go over literally just came out a few hours ago. So we're going to break down their earnings. We're going to talk a little bit about their revenues, their cash flows, the valuation, their profitability, the industry that they are operating in, and the future of this industry and for the company as well. So hope you guys enjoy this video and find it helpful. If you do, make sure that you drop a like and don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is also going to be down below if you're interested in joining us. And we've got a lot of members, over 3,600 members, and you can access all the private videos, day trading alerts, swing trading alerts, investing alerts, and of course, not to mention options alerts as well. So links are going to be down below if you're interested in joining. So the company that we are going to be discussing today is going to be none other than Fiverr, ticker symbol FVRR. And Fiverr's chart kind of looks really interesting. You can see how it had enormous growth in 2019 and 2020. The stock rallied over 1,800%, but just how quickly it went up, it pretty much sold off over 92% from its all-time highs. At one point, it's hard to believe, but Fiverr was trading at over $344, and since those prices, it's dropped over 92%, trading now under $38 per share. It kind of looks like a little bit of a mustache if you kind of put up a face over here. So you've got Palantir, and it kind of looks like a sad face as well because of course Palantir obviously dropping pretty substantially. I mean, the good old days of high growth and high tech and speculation unfortunately are gone, and Palantir here with a pretty big sell-off, down over 92%. Anyway, we're going to do a quick analysis on the company. They just reported earnings today. Pre-market, they were supposed to report earnings. I'm going to do like a price to sales analysis on the company, but before we get into this, I want to break down some freelance statistics for 2023. This is a report that actually came out on February 2nd, 2023, so literally just a few days ago. A really good report put together by Alexandra. So I want to break down some of the statistics and some trends and some interesting facts about the industry that they belong in. So approximately 1.57 billion people in the global workforce are freelancers. By the way, for those of you who don't know, Fiverr is a freelance marketplace where buyers and sellers can connect together, and whatever services you're looking for, whether it's website development, graphic design, logo, voiceovers, scripts, whatever it is you're looking for, I'm sure you can find somebody who can help you out on Fiverr. You may or may not have already used it. I've used it plenty of times in the past to create my logo, create my thumbnails, create a lot of different things. So Fiverr, you can actually get a lot of really quality work done for a lot less in price, because a lot of the buyers that I've connected with have usually been in some of the Asian countries. Very rarely do I come across somebody in Europe or North America. Depends on the skill set as well, but most of the times I connect with somebody over here in India or in Pakistan or somebody that's in Asia. But nonetheless, you do get a lot of quality work done for a lot cheaper as you would hiring a professional elsewhere. But I actually didn't know that over 1.57 billion people in the global workforce are currently considered as freelancers. And worldwide, the total freelance platform market is estimated to be worth $3.39 billion. And we'll also talk a little bit about what Fiverr themselves see as the global market for themselves, right? That the total addressable market moving forward. Now, 61% of freelancers specialize across 2 to 3 different talents. Only 5% of respondents said that they focus their work around a single skill set, and just 13% work for one client at a time. 51%, majority of freelancers say no amount of money would entice them to take a traditional job. And I think the flexibility, the time and the commitment flexibility that you get being a freelancer versus being in a job is like night and day, right? Obviously, as a freelancer, you're working on your own schedule. You're not reporting back to anybody. You're your own boss pretty much. So obviously, I think that's that element for freelancers, which is very enticing, and no amount of money apparently can pivot them away back from being a freelancer to being in a job. According to Fiverr Workspace report, 77% freelancers admitted they are not more financially stable since going independent. 43% say they are worse off, and 34% say they're about the same, and yet they're markedly happier. 68% respondents said their quality of life has improved since going independent. So it's actually quite interesting that even though we've got, about 77%, which is a pretty substantial number, 77% of freelancers said that they're financially they are either the same or worse, and yet they are happier after going, more independent. Just goes to show how much people value time and flexibility over money. So that I think is a very, very interesting takeaway from this entire gig economy or this creator freelancer economy. And moving forward, the future of freelancing, 58% of non-freelancers, people who are not currently freelancers, are now considering becoming one in the future. And the United States has the top rising freelance economy at 78% growth on a year-over-year basis for revenue. And 59% of non-freelancers say it is likely that they will do freelance work in the future. And I think that's where we are also potentially headed with a lot of AI tools, a lot of accessibility to technology and internet and a lot of things. I think a lot of people will take up side hustles. That doesn't necessarily mean quitting your job and starting a freelance gig, but it's just something that I think people will just do in addition to their current job, kind of starting a side hustle and really, showcasing their skill set and being able to help and add value to other people around the world using freelancing. Currently, 58 million and counting freelancing are poised to become the US majority workforce by 2027. Just think about that for a second. Right now, 58 million freelancers in the US alone. Population's like 350 million. So that's a lot of people already. And it is expected to become the majority workforce in the US by 2027. And another really interesting thing about freelancers is the fact that the companies can hire freelancers on a contractual basis. They're going to be saving so much cost, right? So it's kind of like a win-win situation between both companies and freelancers, because on one hand, the freelancers are getting paid to work at their own schedule. They've got the flexibility. They're not under, significant employment contracts with the company, and they can do the things on their own time. And the companies also have a win-win situation because they don't have to hire this person and pay all the expensive benefits, health insurance, social security, Medicare, all those things. Instead, it's a contractual basis, so they can get the work done for significantly less cost, right? So it's a win-win situation for both parties. And I think that is going to be just mind-blowing. It's obviously going to increase a lot of operating leverage for a lot of these companies and be able to generate higher income, higher earnings, all those things. So the global freelance platform market size is projected to boom at a CAGR of 15.3%, which is exactly why I think there's a lot of growth in this sector. Compounded annual growth rate of 15.3% during 2021 all the way through 2026. And that's where Fiverr actually comes into play, because this is a stock which, we've talked about before, but the fact that it's down so much and they just reported their earnings, I figured, what's a better time to talk about this company? And this is a presentation from November 2022, so fairly new. And again, Fiverr is a global marketplace that connects freelancers and businesses for digital services. We change how the world works together. So again, if you haven't checked them out, Fiverr and Upwork, they're kind of like two companies that do offer very similar services for freelancers and of course businesses and with all these digital services. And this is the large market opportunity that Fiverr is basically seeing for themselves. They're seeing $247 billion addressable market because they're looking to disrupt all these independent skilled labor, which is creative, technical, and professional services. Now, this seems a bit of a stretch. I don't think $247 billion is the actual correct number, or at least not open to all disruption. But I think we have to really look at, the freelancer gig economy, so to speak, which I think might be a lot less than what they have projected this out to be. But of course, it's an investor presentation. Of course, it's going to be a bit of a sales pitch to begin with. This right here was also really interesting, which kind of goes over how freelancing is still an old school business. And I was kind of surprised to learn that even today, right now, most of the freelance work is actually done offline. This is crazy. Like, this is absolutely wild. In today's day and age of the internet, only this small sliver is done online. Everything else, the majority of freelance is still happening offline, which is absolutely crazy to think about, which of course is a big potential opportunity for companies like Fiverr and Upwork if they can tap into it well. There's a lot of opportunities to kind of turn that offline work into online. But again, there's a problem there because Fiverr does charge a small commission or a service fee. So here's how we go into Fiverr's business model. So let's say a seller lists their service for $100, right? So let's say that I'm a buyer. I need to get a website built, and the seller has that listing for $100. By the way, no seller is going to be listing a web development project for $100, but just for the sake of this example, let's say the seller has it for $100. I, as the buyer, will end up not paying $100, but instead I'll pay $105.50 to Fiverr for facilitating that deal, right? For connecting me to the actual seller, to the web developer. I pay a little bit more, obviously, and Fiverr takes that 5.5% as a service fee. And then I think it's a little bit less. So for purchases under $50, buyers pay an additional $2 small order fee. So it's a little bit lower. And, quite interestingly, the word Fiverr comes from the word five, which originally was $5 gigs. And that's how they actually got started, where you could find a lot of gigs on Fiverr for $5. But, now it's really difficult. I challenge anybody to find a $5 gig because it's going to be incredibly challenging. Most of the ones that I actually see are $100 or more. And some of them are actually in the thousands of dollars, depending on the seller type, whether it's a pro, verified, whatnot. But, Fiverr is no longer Fiverr, in my opinion, because you can't find any $5 gigs. Instead, they're like extremely expensive. But you're also getting quality work, though. And work starts immediately upon order, and then Fiverr pays the seller $80. In other words, 80% is available for the seller to withdraw right away from their wallet. So that's the basic business model. And the reason why offline versus online there's such a drastic difference is because offline, obviously, you're not going through a intermediary, right? You're not going through a third party, and you're not paying the extra cost. You're simply, the buyer and the seller are working out the details together. The seller is going to invoice the buyer is going to pay the invoice, and that's it, right? Job done, and we're both going on our own ways. With Fiverr, of course, you are paying a little bit extra, and the seller doesn't necessarily have access to all the funds right away. They have access to 80% and then 20% after the job is done. So there's a little bit of sort of like a friction, so to speak, right there. Now, in terms of active buyers, a trailing 12 months, now Fiverr has been at 4.2 million for quite some time. So entirety of 2022, they actually did not increase their active buyers. They were pretty stagnant at 4.2 million. And I think that goes to show that advertising was down quite a bit. So I think not a lot of demand was there for freelancers, and the gig economy kind of stalled a little bit. But moving forward, if the numbers are right, if the growth is there, I wouldn't be surprised if this active buyers numbers continues to push higher. By the way, we'll talk a little bit about what they actually reported in earnings and how many buyers there were in the fourth quarter. But spend per buyer, this was actually quite interesting as well. That's been growing. So even though the buyers themselves have been pretty stagnant, they are spending more per order, and that's up to $262 per order on an average basis for every active buyer. This right here is going to be the revenue themselves. So revenue for Fiverr has grown at a 58% compounded annual growth rate. But of course, this year in 2022, they kind of stalled at over 13%. I'll go over the numbers here in just a minute. But 58% CAGR, which is pretty substantial if you think about it. Just a little bit under $300 million in 2021. This right here are some of the multiple levers that they are looking to pull over the long term. So bringing in new buyers onto the platform, moving up the markets for buyers and sellers, and expanding our gig catalog and expanding the geographic footprint and going into different locations as well. Now, this right here is the full 2022 highlights, and this was reported literally a few hours ago. Pre-market is when they were supposed to report numbers, and the revenue for the 2022 came in at $337 million, and that's an increase of 13.3%, significant decline from the 58% that we've seen over the last 4 years. Gross margins also declined a little bit, but take a look at this, over 80% in gross margins, right? Non-GAAP gross margins at over 83% in 2022. So all they're really doing is creating this website and allowing for the buyers and sellers to cooperate and work together. So gross margins are incredibly high. So in other words, for every $1 in revenue Fiverr makes, 83 cents is gross profit for the business, which is fantastic. All they really have to spend now is on operating expenses, which is exactly what they're doing. Unfortunately, with a high stock-based compensation, their net loss, which is on a GAAP basis, their bottom line is a net loss of $71.5 million. You explain to me how a company is going from an 83% gross margin. Excuse me, I got to cough a little bit. 83% gross margin to a net loss of about $71.5 million. We'll take a look at their income statement in just a minute here, but that is quite staggering. Non-GAAP net income was $28.9, almost $29 million and an EPS of 78 to 71 cents per share. So if you do the math here right now, Fiverr trading at 37.77, and their non-GAAP net income per share was about 78 cents. They're trading at 48 times earnings at the moment, considering their non-GAAP earnings per share of about 78 to 71 cents per share. Now, if we break down the outlook, we'll come back to that in just a minute, but I want to break down their numbers first. So $337 million in revenue. Cost of revenue is really, really low. So gross profit, $271 million. And then take a look at this, right? They're spending a lot on R&D, $92 million. They're spending on research, sales and marketing, $174 million. They're selling general administrative expenses, $51 million. So that's actually pretty flat year over year. It's actually gone down a little bit from $52 million to $51 million. Their sales and marketing is up quite a bit, and that includes your stock-based comp, which is a non-cash expense. And then you've got your research and development also pretty high from $79 to $92 million. And total operating expenses as a result, $345 million, which is not only growing at a much faster rate than revenue, is also at a much higher number than the overall revenue. And as a result, you've got an operating loss of $74 million. You've got some financial income, that could be based on the investments that they've made. And as a result, their total net loss, $71.5 million. And shares outstanding, 36.8 million shares outstanding. So overall, I feel like this is a company that can be profitable if they wanted to, but I feel like they're spending a lot more money on some unnecessary items like R&D. Like what's the point of spending $92 million on research and development? Like I feel like they can get away with a lot less. It's a software company at the end of the day. All they really are a software company, right? So I understand that the research and development is really a crucial part of adapting to the next big phase, next big trend, but that is a lot of money being spent. And then of course, sales and marketing, $174 million. That's also up quite a bit from same time last year is a lot. So I think they can get away with a lot less, in my opinion. Now, in terms of the balance sheet, they are sitting on cash of $86 million. They've got marketable securities, $241 million. That's a little bit over $300 million. And then you've got the marketable securities under non-current assets, $189 million. So all in all, they're sitting on about $500 million worth of cash and marketable securities. And they've got their total liabilities sitting at $658 million, with long-term loans and other non-current liabilities sitting at just about 1.5 million. So really not that much. And then convertible notes sitting at $452 million. So their net debt really is going to be at around zero. So it's not positive, it's not negative, it's zero. So they've got the equivalent amount of cash than debt on the balance sheet. It's pretty much 1-to-1. So it's really not that bad. It's actually really good. And current assets do exceed current liabilities by 4 or 5 times. So very good balance sheet in my opinion. Now, when it comes to the outlook, they are only expecting 4 to 8% growth on a year-over-year basis. That is actually really, really low. They're not expecting a lot of growth. Fiscal year 2023, only 4 to 8% growth from $350 to $365 million in fiscal year 2023. So if you kind of plug in that number, let's just go 365, and the share count we already know, it's going to be sitting at 36.8 million shares. So we're going to plug that number in. 36.8 million. So if we go with, let's say, 12% discount rate, 10%, I'm going to go with 20% margin of safety because it's Fiverr and, we're not profitable and there's a lot of risk involved. Share dilution, I'm going to go 1%. And price to sales multiple, I'm going to go like a decent 5 times sales and a growth rate of about, let's just do 10% for beginners. We end up at a fair value of $34.50. And right now, Fiverr is trading at $37.77, which means just about 8 to 9% pullback. And Fiverr could be seen as a company that, might just pull away. But again, this is a 10% growth rate, right? What if I go with, let's say, 6% growth rate? Because that's what they've pretty much guided for. No, they've guided for somewhere between 4 to 8%. So they've really guided for low growth, but this is only for the next year, right? What if we take the next 5 years at 6% and 5 times sales for the company? Because right now the market cap is $1.4 billion. So 1.4 divided by, 300 million is 4.6 times sales. So right now Fiverr is trading at 4.6 times sales. So if we do 4.5 here, just to keep things consistent, fair value would end up at around $25. $25 to $26 for Fiverr is what I think would be appropriate. And this is considering a 20% margin of safety, by the way. If I hit 0%, fair value would jump up to $32. But I want to build that margin of safety because it is a really volatile stock. And in fact, we were trading at $25, $26 not too long ago before Fiverr pretty much rallied about 42, 46%. So this is going to be a stock that's on my radar. I'm not convinced. Like, it's not a company that I have like high conviction in, but at least for starters, this is a company that I may look into from a more fundamental long-term perspective if this sort of sector takes off pretty rapidly. So let me know your thoughts on this company. Let me know what you think. Support level is going to stay put at roughly around $25, $26. And that's also going to be in line with my fair value. A little bit of a hammer candle last month from Fiverr. Actually, this month in February so far for Fiverr and pre-market, we've got no trades for this company right now. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like, subscribe. As always, happy investing, and I'll see you all in the next video.